Hello, on behalf of Coutts, I'm delighted to introduce the Coutts Multi-Asset Funds, otherwise known as CMAF. You'll hear that a lot through this video, and we'll go through the investment principles and what's inside the Coutts Multi-Asset Funds. So inside the Coutts Multi-Asset Funds, we use the Coutts investment principles. Let me take you through them. Firstly, diversification and open architecture, what we call a so-called blended approach. So you'll see a range of third-party funds, the likes of Invesco, Fidelity, etc., some direct securities, equities and bonds, and some low-cost ETFs. We think this provides a great balance of keeping open architecture the best of breed from third-party, but keeping overall costs low via direct securities and low-cost ETFs. So that's the first one. The second point is that we take a macro-orientated view when constructing the portfolios. We pay a lot of attention to the economic cycle, pay a lot of attention to, for example, is the US going to recession, yes or no? Third point I'd like to talk about in terms of our style, and you'll see that through some very interesting securities inside the portfolios, is that we have a value and contrarian style. What does that mean? We have a preference for securities and especially markets that offer value. Often that is contrarian. One example in the portfolio that has been fairly long-lasting is financial debt, for example, and my colleague will talk more about securities a little later. Additionally, I would like to talk about quality. Often value and quality is in a fight, so-called an investment fight, but actually sometimes they combine, and that's a really nice situation. What do we mean by quality? So there is added value, especially in stock selection, by choosing either funds that embrace that. So one inside the portfolio would be Lindsell Train, that buys quality UK equities, and they have a long-term historical record of increasing dividends and typically low debt. Finally, I'd like to mention that we're long-term in our thinking. So these are funds, they are unitized, they're very efficient for dealing, but the Coutts Multi-Asset Funds are over 4 years old now, so they've got a 4-year track record, and some of the securities we bought on day one we still hold today. We certainly don't believe in churning the portfolio. We will make changes when the environment's right, but we believe in being long-term. That's particularly important with the third-party fund managers, where the so-called alpha or added value from investing in them can be a little bit unpredictable over a cycle. You need to hold these managers long-term to earn the alpha. What are the Coutts Multi-Asset Funds? They're simple. They're unitized, so-called UCITS funds, registered in Dublin. We have the Bank of New York as an external custodian and administrator. So what asset classes do we invest in? Of course, we invest in equities and bonds, as a reminder, both directly and also funds and low-cost ETFs. Also commercial property. How do we do commercial property? Typically either via investment trusts or a structure. We can't actually own commercial property funds, but we can get access via investment trusts. And we are quite a heavy user of investment trusts. That distinguishes, I think, the Coutts Multi-Asset Funds from a lot of other products, because in investment trusts, very attractive range of asset classes, but very important to trade slowly and in small size. And the unitized structure is ideal for that.
We have two sets of CMAF funds, CMAF UK and CMAF Global. CMAF UK has more sterling-denominated assets, and CMAF Global has a bias towards US dollar-denominated assets. There are three broad risk categories called defensive, balance and growth, which reflect broadly the bond equity weightings that they carry. So CMAF Defensive is the most cautious, as the name suggests. It has broadly a 75-25 bond equity weighting. In reverse, the growth profile, which is the most aggressive, has a 25-75 bond equity weighting broadly. And the balance profile is in the middle with 50-50 weighting. In addition to that, CMAF UK has also got a 100% equity strategy, which is called equity growth. Let me use an example. Say we wanted to increase our US equity weighting within the portfolio. At its simplest, we can buy a bigger weighting in equities in the growth profile, and we can buy a smaller weighting of equities in the defensive profile. Or we can fine-tune that adjustment. We can buy a small cap exposure in the growth profile and an income-producing solution in the defensive profile. CMAF uses a blended approach towards investment routes to market. So it can use a combination of single stocks, it can buy actively managed funds, and it can use an index tracker. So in the example of US equities that I spoke about before, it could buy a JP Morgan stock, it could buy a healthcare fund which has a good performance record, it could buy an S&P ETF. It depends on the view that we are trying to reflect on a particular opportunity that's available in the market. In addition, CMAF has the flexibility to use derivatives. It could, as appropriate, trade in the futures market, or it can use currency forwards in order to hedge out currency risk.
So who manages the Coutts multi-asset funds? It's a large team. In fact, the investment team here, we have over 20 CFAs, chartered financial analysts. We have people picking the funds, the best of Fidelity and Schroders, etc. We've got even individuals who specialise on ETFs, what are the very best low-cost index tracking funds. We have people helping us on direct bonds and direct equities, all helping to make a really, really good portfolio.